Hi, my name is Nurul Shazana binti Muhammad Alias and my metric number is 288193. So the first case to be discussed is Ketua Pengarah Hasil Dalam Negeri versus Datuk Hanifah Nordin. So the issue that has raised in this case was the compensation amount and adjustment payment and income or capital receipt in the hand of the taxpayers. The fact of this case is the taxpayer, a partner in Ernst and Winnie, which is the firm, left the company due to not agreeing the firm merged with another firm, where three partners has voted against it. Between partner and the firm, they agreed to retire with the settlement agreement, where taxpayer was paid a compensation amount of 1,199,651 ringgit in 23 equal installment and 20,262 being adjustment payment. This amount were described as consultancy payment in the account, and this payment are made in consideration of the taxpayer, which is the first one is agreeing to cease as a partner on 31 July 1990. Second, losing all rights in the said partnership. The third one is waiving all rights to challenge the merger, and the last one is agreeing to refrain from taking any legal action in respect of the said merger. The taxpayer did not participate in the new or old partnership after 31 July 1990. And also did not execute any consultancy agreement with the new or old partnership, and didn't do any consultancy work for the new or old partnership. So for the agreement in this case is from taxpayer content. The first one is the sum paid capital consideration for retirement the partnership due to the change in the business structure of the old partnership. The sum paid withdrawal of capital in respect of the goodwill upon retirement and capital in nature. The consideration received is for the loss of right under the partnership agreement dated September 1981. The consideration received is for all the three states above, as well as for refraining from competition and therefore are capital in nature. The payment are not consultancy payment from the taxpayer. So for the decision of this case, the appeal was dismissed due to the compensation amount and adjustment payment are income accessible on the taxpayer. This is because the compensation amount and adjustment payment were reflected as consultancy payment in the partnership account, and it is settled by law that how parties describe payment didn't decide or determine the nature of payment. The payment received by the taxpayer was capital in nature, as these were paid for their retirement from the partnership. And lastly, the method calculation of the payment remain as capital even though they were calculated by reference to work in progress. The second case is AMC Sendirian Berhad versus Ketua Pengarah Hasil Dalam Negeri in 2004, where the issue in this case is whether the expenses incurred by the taxpayer by way of providing free ticket for overseas trip to the individuals who attain sales quota are expenses wholly and exclusively incurred in its business pursuant according to Section 33 of the ITA 1967, or whether they are expenses incurred in the provision of entertainment and should be disallowed under Section 39 ITA. And the fact of this case is the taxpayer carried on a business of selling cookware, kitchen utensils, and water filter to the public through individuals to whom it paid commission. And individuals who achieve certain sales quota level will receive will receive free trip or ticket to overseas destination including accommodation. So based on CPA tax and investment review 2005, uh, Director General Inland Revenue had allowed these expenses as being deductible of the computation of the adjustment income of the taxpayer for the year assessment, which is in the year 1989 to 1992, 1994, and 1995. But in year 1996, these expenses were disallowed, and the GIR decided disallowed the expense based on the year stated, so that the taxpayer appeal against the assessment. So argument from the taxpayer um, contended the expense incurred by taxpayer are wholly and exclusively incurred in its business and should be allowed as a deduction pursuant according to section 33(1) of the Act. And the taxpayer had a legitimate expectation that the GIR would allow the expense as a deduction and would expect the DGIR to continue to allow the deduction. And the expense were incurred in the provision of entertainment should be disallowed under section 39 of the Act as expenses were given to non-employees based on DGIR. There was no element of legitimate expectation as the additional assessment issued were authorized by law and were not against natural justice. So the last cases, which is Hall versus Lorimer. So the issue in this case is whether the contract between Mr. Lorimer and the production companies was contract of service or contract for service. So this is an appeal by Inland Revenue in person of Mr. Hall, Her Majesty Inspector of the Taxes, against a decision of Mammary J dismissing the appeal of the revenue against a decision of special commissioner. Mr. Lorimer decided to leave full-time employment with Molinare Limited and became a freelance vision mixer, doing work for over 800 days in the period from 2 February 1985 until to 5 April 1989. Apart from three occasions when he worked as a technical directors, and also transmission controller, all of the taxpayers' engagements were vision mixer. Taxpayer has had no full-time and long-term contract with any one company since he left Moliner Limited. All the taxpayer work as a vision mixer is done at the studio owned or supplied by the studio company. He doesn't contribute any money to cost of the production of the program. So for the argument, financial advisor, which is Mr. Goldsmith, submitted that the fundamental distinction between a contract of employment and a contract for the service is that in the former, the contracting party sell his skill and labor. In the latter, he sell the product of his labor. The next one is Lorimer only provided his personal skill and didn't provide any equipment, didn't preclude self-employed status. And lastly is the risk of having no work to do is agreed for casual employee as a self-employed individual, but the risk of bad debt and outstanding invoice was not normally associated with the employment. And the decision for this case, the Court of Appeal concluded that Mr. Lorimer was engaged under contract for his service and self-employed. The fact of Mr. Lorimer has not provided any of that very expensive equipment necessary for the exercise of the skill and labor. Secondly, all Mr. Lorimer provided was his personal skill, and despite do undoubtedly point that a contract of service, but they are not necessarily inconsistent with a contract for the service. So that's all.
Good day, doctor. My name is Eugenia Ruby and my metric number is 2888356. So for the first case is Ho Soon Guat against Ketua Pengarah Hasil Dalam Negeri. The issue is whether the Security Commissioner's decision was correct. The facts for this case is the taxpayer employed by a bank suffered from an illness requiring him to wear a neck collar. In 1997, the bank introduced a suppression scheme for resident officers. The scheme was open to officers who suffering from illnesses but did not require employees to furnish reasons for participation. The bank was not obliged to provide reasons for accepting or rejecting an application. The taxpayer selected for early retirement under the scheme and his application was accepted. He received a certain amount under the scheme. The tax authority taxed the amount after deducting 400,000 per completed year of service based on paragraph 15(1)(b) Schedule 6 of the Income Tax Act. The Special Commissioners SC dismissed the taxpayer's appeal, holding that the loss of employment was due to voluntary participation in the scheme. The taxpayer decision was not due to illness or any other reason, but a voluntary choice, and the compensation qualified for the tax exemption only under paragraph 15(1)(b) Schedule 6 of the ITA. There are two arguments for this case. First is taxpayer. The taxpayer stated that the compensation was for loss of employment due to ill health and therefore he was entitled to total exemption under paragraph 15(1)(a) Schedule 6 of the ITA. The second one is from Inland Revenue Board, which is they argued that the compensation was paid for loss of employment. The taxpayer only entitled to exemption from tax under paragraph 15(1)(b) Schedule 6 of the ITA. The decision for this case is the taxpayer's appeal was dismissed. The High Court agreed with the Special Commissioners that the issues was question of the fact. The key question was whether the compensation was received due to the loss of employment from ill health. The Security Commissioner's decision was based on primary facts and was not legally incorrect. The Special Commissioner found that the taxpayer retired under the scheme not due to ill health. Lastly, this finding was upheld by the High Court as correct in law. The second case is Ketua Pengarah Hasil Dalam Negeri against Abdul Jalil bin Haji Hassan. The issue is, does the compensation for reducing the age of retirement from 60 years to 55 years constitute income from employment? The facts for this case is the respondent was an executive employee at Petronas Nasional Berhad. The retirement age for executive employees was 60 years old, but Petronas offered executive employees the option to retire at 55 or continue working until 60. Those opting for early retirement at 55 would receive compensation based on a formula. The compensation was to be paid in 10 equal annual installments or until the employee reached 55. Petronas could stop compensation payment if the employee left before receiving the full amount. The respondent opted for early retirement at 54 and received certain amount as a lump sum. The respondent was taxed on this compensation in year assessment 2002. The respondent appealed to Special Commissioners who ruled the compensation was not employment income but compensation for changing the retirement age. Lastly is the appellant tax authorities appealed this decision to the High Court. There are two arguments for this case. First is from the appellant. The compensation arose from an employment source and not compensation for loss of employment. Second is the receipt was a salary 5 years with a discount for early payment and payable in installment. The payment was more to release Petronas from being bound by the terms in the employment contract. Second argument is from the respondent, which is the compensation was not income from having or exercising an employment. The compensation arose from his giving up his right to continue his employment with Petronas until age 60, and it was capital receipt and not income. The decision for this case is the High Court held that the compensation was to allow Petronas to implement a new policy on retirement age. It was not income from an employment. The payment was not for the services performed or to be performed or a payment of advance salary. The last case for me is LCC against Ketua Pengarah Hasil Dalam Negeri. The issue is unilateral relief available to the taxpayer pursuant to paragraph 15 Schedule 7 Income Tax Act. The facts for this case is the taxpayer, a Malaysian citizen, was employed by a Malaysian company. In the year of assessment 1997, the taxpayer was a resident under Section 7 of the Income Tax Act, despite spending 302 days in the USA in 1996. The taxpayer was required to be in the USA as a part of his employment with Malaysian company. His wages and bonuses were paid into his personal account in Malaysia. The income earned in the USA was deemed derived from Malaysia under Section 13(2)(a) and Section 13(2)(c) of the ITA. The taxpayer paid Malaysian tax on the income and also federal and state taxes in USA. He sought unilateral tax relief for the federal tax paid in the USA under paragraph 15 of Schedule 7 Income Tax Act. Lastly is the Inland Revenue Board (IRB) rejected the claim, stating the income was not foreign income since it was deemed Malaysian source under Section 13(2) Income Tax Act. The argument from this case is the taxpayer argued that the phrase income from an employment exercise outside Malaysia in paragraph 15 Schedule 7 referred to income in respect of employment pursuant to which the employee is required to perform duties outside Malaysia regardless of whether the duties are incidental to exercise of such employment, and such employment is in Malaysia, and lastly is such income is derived or deemed to be derived from Malaysia or from outside Malaysia. Argument from RIB, which is they argued that notwithstanding the double tax suffered by the taxpayer, unilateral relief was not available because the phrase income from an employment exercise outside Malaysia referred only to foreign income within the meaning of paragraph 16 Schedule 7 Income Tax Act. Foreign income is defined in paragraph 16 to mean income derived from outside Malaysia. Lastly is the decision for this case, which is the taxpayer's appeal was allowed for the following reasons. First is while it is important to read paragraph 13 to 15 Schedule 7 as well as Section 13(2), the clear language used in paragraph 15 means that this paragraph can stand alone. It is clearly specific only to employment in respect of an employment exercise outside Malaysia involving Malaysian as well as foreign tax. Second is, in statutory interpretation, effect should be given to the ordinary meaning of a word. Lastly is paragraph 15 uses the word may, and in this connection, it should be construed as shall and does not give the IRB the discretion to decide whether or not to grant unilateral relief.